Welcome back. Joining us now, financial analyst Steve Budin to talk about home mortgages. We've been getting tons of questions. It's a lot of interesting things happening right now in the Las Vegas real estate market. So Steve, let's start off with, for those in a home right now, is it a good idea to refinance?
I've been asked this question a lot lately, so I figured we should discuss it on the air. If your mortgage interest rate is higher than the current market, it might make sense to consider refinancing because mortgage rates right now are hitting historic lows. And while there's no concrete formula to say yes or no, generally, if you plan on staying in your house, a couple of years and you can knock 1% off your mortgage rate, it might be a good time to consider refinancing.
Are there any possible cons to refinancing a mortgage?
Well, one of them is you could potentially be extending the amount of time you pay, right? So if you took a 30-year mortgage out 5 years ago, you will have made 5 years worth of payments. If you refinance today and take out another 30-year mortgage, the 5 years you have already paid gets erased, right? So now you're paying another 30 years. So you would potentially be paying 35 years. But another option would be a 15-year mortgage with interest rates so low. The spread between the 15-year and the 30-year is not that great. So it might make sense to consider that option.
Anything else that people should be considering if they're taking a hard look at their mortgage right now and wondering how to make their finances work the best?
One thing that I've actually been doing is, with bank account interest basically zero, one thing that you can consider doing is making maybe an extra $100 or $200 a month payment on your mortgage because you will at least be saving some interest. So for example, if your mortgage rate, let's say, is 4%, if you have the money sitting in the bank, you're earning zero. But if you take, let's say, $100 a month or $200 a month extra and pay down the mortgage principal, in effect, you're making 4% on your money because that extra principal payment is saving you that interest payment going forward, which will also help you pay down the mortgage faster.
Ultimately, that mortgage working for you in a way.
Yeah, it's kind of a backdoor way to earn some extra interest on your money by prepaying that principal just a little bit.
All right, that's all the time that we have for today. We'll post more of this on our website, ktnv.com, in the interview section of the website, and we'll be right back after this.